Good day, everybody. I'll be with you in just a moment here to get things started. Just a little housekeeping before we get going here. We're broadcasting on LinkedIn and YouTube and also on Twitch. If you are someone watching on your mobile phone or device in which when you click off of the video, the sound goes off because you don't have YouTube Premium, switch over to your Twitch app or your LinkedIn app and you'll be able to watch it in the background or listen to it in the background while you multitask. I know you all want to see my fancy studio and all that and our guests, but really you want to hear the quality content. But anyway, as I always say, let's get this show started. Good day, everybody. I told my guest this might be a little bit of Ellen in the show, but I wasn't going to do a little dance for you. Anyway, good morning, everybody. My name is Tom, otherwise known as Striking, here on the DYOR Media Network. I'm so happy to be with you today, hosting another episode of DYOR Live, and that means we are live. This is our long-form show in which we bring a guest on and interview people, not to be confused with our show DYOR Now, which is just shorts that hits topics of the day. Good show for you today, ladies and gentlemen. I've been putting a lot of work into this show, getting good guests on, covering different topics. And amazingly, this wonderful lady in the industry decided, yes, I will be on DYOR Live with Tom and Pedro this morning. And so we're going to have our guest today is a woman in the industry that has reached out and affected many people's social media streams and livelihoods as she started her own bank in this great country of the United States, and specifically in the state of Wyoming. I know everyone knows what I'm talking about, but that's not the point right now. Right now, I just want to get the show started. Pedro Garcia, welcome to the show. Pedro, are you there? Are you there?
Hey, I am here. Can you hear me?
I can, Pedro. Let's get your chart up on the screen here.
Perfect.
So what is happening this morning, Pedro? What's going on in the markets? Yeah,
just like I said yesterday, we're playing in between the 26,000 area down into this 24,000. Now, the reason why I'm bringing this up is because you can see here that we're consolidating and we are building up a short position here. Now, like I've said before the big news announcement that we had the ETF that came into the market a couple weeks ago. Like I said, we were up here and we had these higher time frame moving averages on the monthly and as well as on the weekly. So I said, be prepared for us for the shoot up first before we see the sell off. And I said, be ready for a news event. Did I not say that?
You did. I remember.
And lo and behold, we had that news event, which pushed it up into these areas where there are sellers sitting, waiting for a better price to put it on the shorts. And so now that they were able to push it up and drop it down, you can see here, I said, if we go up in the beginning of the week, we will most likely go down into the mid to end of the week. So and we did that. We put in the weekly supply or the seller wick, and now we are continuing down. So if they decide to do a typical September and October bad months, we should then see this down. Well, that's, if you look at the market and you trace it all the way back to the 1930s, you can sit there and see it. It's a huge, it's one of those things that it's pretty big. So I always tell everybody, pay attention, because the market doesn't necessarily hit rewind, but it does repeat itself, right? Just like in history. So it's the same thing, just a different face. And so we're seeing this here right now. And like, again, I've been talking about this 24,000 and then that 20,000 area. I see this coming into this levels. And if we start to see some major sell-off and they start tripping the short buys, the sellers, by tripping the longs here, we're going to see, again, major sell-off down into these 20,000 area, if not further, down into the 15,000. Now, this is important to understand. I talk about the monthly chart, right? And then as well as the yearly chart. We're going to come down and put this wick in. We're already starting to put in. We're seeing the increase in short step in, especially on the CME, and this, I want to make sure you guys understand this, the CME charts, okay?
You've been talking a lot about the shorts building up and the big buy positions down low.
Yes, and just, it's one of those things that's so important to look at. And so for that, that's not a bad thing, because this basically puts BlackRock as well as Goldman Sachs in a better position so that they can eat up the market, because they want to get in short because they're late to the party, or excuse me, they want to push the market down so they can buy up and take over the supply.
It's easier to move it from 10,000 to 30,000 than 30,000 to 100,000. That's for sure.
There you go. All right. Well, that's it. That's in a nutshell. So just for the week, be ready to come down to that 24, 23,000 area. If we do see a bounce off of that, we'll probably come back and test that 26, 27,000 mark area on BTC. One last thing, and I promise it'll be real quick. I wanted to point out the dominance of BTC as well as ETH altogether. So this is a chart of the BTC dominance in BTC and ETH dominance over all the market. And you can see that it literally holds almost 70% of the market. So in relationship to the rest of the top 20 crypto, this is a juggernaut. So if I'm already seeing on a yearly chart, and I want you to pay attention to this, we're selling off on the dominance of this. So as this starts to go down, okay, we're going to see the other coins start to move up. Okay, and so as we come into the halving and as we start to progress towards that, as we always see, right, we have altcoins that come in, and we have altcoin season that kicks in, and there's a lot of money to be making. So we're going to be paying attention, also pull away a little bit from BTC and ETH and start looking at altcoins to see what's maybe of good value to look at down the road. So I'm going to point that out. All right, I'm done.
All right, Pedro. Thank you for that. I appreciate that. I appreciate the insight you give into it. Like I tell everybody, I said Pedro is the technical analysis. I'm more of a fundamental, really big picture guy. But as I pay more attention to Pedro doing his thing on the show here, I learned a little bit more, and I see the spots where the technical analysis and the fundamental stuff kind of overlaps. But all those lines still confuse the shit out of me. I got to tell you, Pedro, I worked on the commodities trading floor in New York for a long time. And this back in the day when they had square TV screens with colors for options in the knife and US dollar trading pits. And I got to understand those colors, what they meant, and that type of stuff. It was like a magic secret code. But your Wick chart, as I call it, the John Wick of charts, and the lines on it, I still haven't mastered that yet. So, but we're working on it. We're working on it. And so, anyways, I'm going to bring your chart off and head back to
Miss Caitlin, Miss Long.
See, I'm not always getting this right there. There we go. All right, so one of the things that I like to talk about here is before we get on with the show, of course, is the people that sponsor the show here, and I do want to point out two of them right now. One of them is that's our guest. One of them is Swiss Asset DAO. Swiss Asset DAO is not, as I say, I don't take advertising from token things and anything like that. This is a project I'm actually helping build the community for. So they are sponsoring this episode. They are the official DAO of DAOs, as I call it. And they are a completely legal in Switzerland DAO. They're an association formed by its members, of which, full disclosure, I am one of. And they are there to help other DAOs be legal and to get in business or have tokenization projects need a legal home. Or if you need advice on how to set up properly in a legal jurisdiction, namely Switzerland, the guys and gals in Zug will help you out. Anyway, and the Swiss Asset DAO website is behind me. On there, they have their community building and their legal workstream meetups, and all are welcome in that. Since it's a DAO, we welcome everybody to join and participate and help build a DAO that is for all the thousands of other DAOs that are forming out there. And I also can't get by without mentioning over my left shoulder here, Auditchain. Auditchain's been very good to our channel. As I say, they are the sponsor of all original programming here. What Auditchain does is they have the ability through their software to go in and audit all the SEC filings for public companies or anyone else that has to report their finances in an XBRL format. And literally what we've done on our show here is run Tesla's or Bank of America or what are the other ones? Silvergate and Signature Bank and even Deutsche Bank. We ran them live on the show. It takes about 2 minutes or less. And within seconds, we knew what was wrong with their financials. We knew what disclosures they hadn't formed. We found balance sheets that didn't balance by billions, if you can believe that. We found all sorts of errors, and Auditchain does that very well, and it's recorded on the blockchain. But instead of having me tell you about that, why don't we just have me tell you about that in this short video about Auditchain?
Most of you know that crypto exchanges have been taking a beating about transparency, and many groups out there are trying to solve that. But Auditchain has already done that. Auditchain's protocols and network of validators can mathematically prove that a company's entire financial state, not just proof of reserves, but a proof of state, and whether or not that company is providing accurate reporting and information to the respective government regulators and to the public. Seriously, you and I can check crypto companies and traditional companies' financial reports for transparency and accuracy using a logic and reasoning engine called Pacioli that records its output where? On the blockchain. Seriously, ladies and gentlemen, blockchain technology is now able to be used to check on traditional companies. Behind me is a list of companies that comprise the S&P 500, S&P 100. In essence, the largest U.S. companies by size. More than one quarter, 29 out of 100, have problems with their reports. Remember, accounting and other corporate systems are garbage in and garbage out. So if there are problems with the data out for these companies, in red here, what does that mean? That's right, ladies and gentlemen. There are problems with the data going in. And this was figured out not by accounting or auditing firms and fleets of consultants. This was compiled and reported on by Auditchain's Pacioli validating nodes and took only 5 minutes. It's revolutionary and it's a disruptor technology. Auditchain.
Well, ladies and gentlemen, thank you for listening to the sponsor of our show, Auditchain.finance. Go check them out. Anyway, we're to that part of the show which I love the most. I love interacting with the guests and the public on this to see if what we could drum up for a conversation. As you know from the introduction and from all the social medias and bodies of the postings, Miss Caitlin Long is our guest today, and I'm very happy to have her on our show. Lots of interesting things to say. And really, everyone that's probably watching this understands her background, so I'll skip the formalities of an introduction and just say that this space always needs interrupters, and interrupters are people that take the status quo and go, hold it now, this isn't working out right, we need some change here. Ultimately, as I say, doesn't matter what political party you are, doesn't matter how you think in life. Ultimately, everybody likes change. It's just the speed in which you're comfortable with change is what makes us all different. And in crypto and in digital assets world, as we know, the speed seems to go a lot faster than everywhere else. We're in this time warp. But the U.S. government is trying to hold us down, slow it down, and if not terminate it altogether under the current administration. But somebody's out there fighting for us, and she's doing it by advocating for us and also starting her own bank to take on the system. Ladies and gentlemen, welcome to the stage, Miss Caitlin Long. Caitlin, welcome to the show.
Good morning. Thanks, guys.
Good morning. Good morning. Now, like I've said, I've had you on here in order to do a couple of things. One is to talk smack about what's going on in Washington, D.C., but more along the lines, we all want to know what is going on with Custodia Bank. We all heard you're starting your own bank, you're doing it all, and we've even heard that you've launched, and we've seen the social media. But what is it? Tell us what Custodia has, when they launched, and what are you doing?
We actually launched in July. We're going slowly. The tortoise beat the hare after all. And we are being very careful to protect our reputation and to just make sure we don't misstep. And so it's the opposite of move fast and break things. We are a bank after all. We need permission. And boy, I can't underscore how different a bank is than a non-bank. The magnitude of regulation of banks in this country compared to non-bank financial services entities is staggering. And
you have the government, you have the American Bankers Association, you've got all kinds of stuff going on.
Yeah, well, I mean, a lot of folks don't realize just how prescribed the regulation is. And when something is so prescriptive and so extensive, I like to point out the recent amendments to the capital rules for banks between 100 and 250 billion in assets are 1,098 pages. So it's not a small amount of regulation that they have to comply with, right? Somebody had to write all that, and then all those banks that fall in that tier have to have staff of people who implement it all, right? So yeah, it's
compliance. Compliance is a big cost.
But we're live as a bank, and I think what's the value to crypto of that? The value is that one of us, a true Bitcoiner, by the way, controls a bank that is not going to, unless Congress outlaws all this and we're not legally allowed to operate, we are going to fight to keep U.S. dollar services open. And Operation Chokepoint 2.0 is very real. But in spite of that, and in spite of the challenges that were thrown at us, we not only survived, but we're thriving. And a lot of folks, I think, don't know that we did launch. We launched kind of quietly because, again, we're going slowly. But we do want the industry to reach out to us, info@custodiabank.com. And let's talk. We're not live in every state. To be clear, we're not FDIC insured. But what we are offering right now is U.S. dollar services to lawful domestic businesses in the digital asset industry, in fintech, and other industries.
And so, to be clear on that, you're not a retail bank with branches on the corner.
Correct.
You're now you're
correct.
An industry bank.
Cloud, 100% digital, building out our API. So it's U.S. dollar services and money market services. Money market fund services, government money market fund services. That's new. That's a pivot that we made, and it's a function of
with the interest rates. You got to do that. Yeah.
Well, you know what's amazing? You asked me how much what I've learned since January. You know what the number one thing I've learned is? How many startups are not managing their cash? Their cash is sitting at banks earning virtual interest. I'm amazed at the magnitude of how much cash is just sitting there. I used to work at Morgan Stanley with corporate treasurers, and the corporate treasurers have whole staffs of people who do nothing but manage their cash. But it's amazing.
Were you at One Liberty Plaza?
Medium-sized. No, 1585 Broadway at the Morgan Stanley headquarters. But yeah, I'm just amazed at how many businesses, because for the last 15 years up until about a year and a half ago, interest rates were at the zero bound. Nobody worried because really there weren't banks failing. There weren't new banks being started. The banking industry in the U.S. was basically just frozen, and it just atrophied on the technology side. The fintechs started to massively overtake them. The gap between the Ferrari front end that you can get working with a fintech and then the horse and buggy back end, that gap grew.
It's maddening.
Exactly. But so many businesses didn't understand how to that they really needed to pay attention to cash management. And what caused them to wake up was Silicon Valley Bank, and just how many fintechs had all of their cash in a bank. And then they started to learn, well, with traditional banks, they're making an unsecured loan to a leveraged institution. Now, the Wyoming Speedy Banks cannot lend. And so the deposits at Wyoming Speedy Banks are not FDIC insured, but by law, we're required to hold 100% high quality liquid assets against them. And you can look at Custodia's financial statements. We are sitting in nothing but 3-month T-bills and less in our investment. It's as
well, those are paying
boring
nice interest now.
It is paying.
Yeah,
it is paying
sorry,
nice rent.
there's a hint of a
That's
delay
okay.
here for some reason, so we're overlapping a little. But
No worries.
I did want to say on your comment about the companies not managing their cash well, for a long time they really couldn't with very little risk because interest rates were zero. You know, they were.
Well, they could have, but
people.
they
A whole
have to.
generation of business people grew up without knowing about it. They're like, oh, I don't know what to do with it.
Correct.
Just let it sit there.
Correct. And for 15 years, every startup didn't have to bother. So that's a big change. And obviously we're seeing the VC cycle taking a very significant downturn. And as a result, a lot of fintechs and tech companies have had to do layoffs. So the last thing they're doing is adding somebody to manage their cash. But what has happened, what we've found is that when we can talk to some of the companies in this industry who are sitting on cash and they don't need same day liquidity, that getting access to these government money market funds through which Custodia can provide is a really interesting win-win solution for everyone. It helps them earn yield. They're not taking the counterparty credit risk of keeping their deposits in a bank that's paying them virtually nothing. Yep. And they're realizing that because of what happened in Silicon Valley Bank, that everything above $250,000 is an unsecured loan to a leveraged institution. So it's a really interesting dynamic, and it has nothing to do with crypto. But there's a lot of cash out there, folks, in crypto companies, in fintechs, in the VCs, and so please reach out to us. Info@Custodia.
And where should you put it? Let's just say, where should you put it? There's a new bank in town that needs your support, ladies and gentlemen. And there's a smart person at the head of it that's going to keep your money safe and grow it too. And that's this person here on my show. But on that note, so you said you pivoted a little. You're offering the money market funds. Any other new products coming out regarding crypto in the?
We're waiting for final approval to launch Bitcoin Custody. And that's our first digital asset product. We're not an exchange. We're not providing trading services. It's plain old, boring old custody. But what's different, aside from the fact that we're a bank and that provides some interesting customer protections relative to non-banks, here's the other thing from a technology perspective. We're actually custodying customers' UTXOs. We're not offering a pool. If you put your money into most custodians, you send your Bitcoin in on chain, you get your confirmation that it went to the custodian's wallet. That's an omnibus wallet. That's not how Custodia works. We're designed for true hodlers, not for traders. So I realize that universe is not necessarily the universe who's going to be watching your show. However, most of the traders don't trade every day. And everybody has learned such an important lesson about counterparty credit risk with custodians and exchanges because of how many of them have gone down in this crypto winter. I had to learn that lesson personally with Mt. Gox. I got goxed. Oh, and man, did I learn? I did. Got goxed. Almost 10 years later now, I still don't have those early Bitcoins that I bought back.
No, the U.S. government has them.
Well, yeah, I mean, they're sitting in a bank, in the Tokyo bankruptcy court, but eventually we will get something back. But that's the point, right? That I think there was so much scamming that was going on. There were so many leveraged business models and outright criminals that this industry, a lot of people had to learn the hard lesson: not your keys, your coins. So it may seem a little bit strange that here's a hardcore Bitcoiner into the industry to build a custodian. But the point is, we're doing it as much as possible consistent with Satoshi's ethos, that your financial institution doesn't necessarily need to be a counterparty, and it certainly doesn't need to be leveraged. And if they're providing you a service and you're willing to pay them a fee for a service, you shouldn't have to be facing a leveraged counterparty. And I do think that is see a distinction in this next cycle. I'm so glad Pedro talked about the halvening. It's coming. Bitcoin this whole industry is starting to look forward. I know a lot of folks are saying it's altcoin season first, and that is in the past that altcoins have outperformed Bitcoin into the halving. But Bitcoin still tends to lead the after market, and great fun that if past this prologue, we're going to be in a bull market at the time of the U.S. presidential election.
Yes.
Well, Pedro, you had a question about that, didn't you?
Yeah, absolutely. Excuse me. Sorry about that. You got me so excited. I got a little. So you're talking about, and I think this is one of those things, and you hit so hard on this. I forget the interview you were with, and it's a smaller YouTube channel, but you said about how as we're entering into the cycle of our every 4 years, Satoshi sat there, and whether it's a he, she, or entity, that it was almost planned as if, okay, we're going to see this push up, and in additionally to that, as it starts to turn over, the business, and I don't know if Satoshi's really thought about this in the advent of business entities coming into Bitcoin, but in the same sense, though, it is this new market turn of if the U.S. dollar starts to mess up. And again, I know this is kind of weird, but I wanted to throw this out because I want you to kind of even elaborate on this, is how the traditional market, as we start to see the fluctuations of the craziness happening in the world, Bitcoin becomes that stable, almost like gold. And then as we start to come in and all the corruption that happens in, that's the wrong word, corruption, but just the bureaucracy of the election, people, instead of going from pulling their money out of XYZ, I almost want to say, do you think that they're going to start putting money into Bitcoin almost as a safe haven and almost as an alpha to push the market, or not the market, but their finances up, and then pull it out after, and then put back into traditional finance? And in addition to that,
is it linking it to the presidential election?
Yes, this is what I'm trying to say, and I think I wanted to talk to you about that because it's such a beautiful thing.
Well, let Caitlin answer that.
Sorry, yeah. I apologize.
Yeah. No, well, the cycle clearly is aligned, right? And
absolutely.
Satoshi created Bitcoin in October 2008, a month before a presidential election. So you might say, well, it was just coincidence because that's when Satoshi was able to create Bitcoin and release the white paper. It just happened to coincide with a presidential election. But Satoshi, the halvening every 10,000 blocks, which, given that Bitcoin blockchain appends a block every 10 minutes on years, so therefore it is going to coincide with the U.S. presidential cycle. Now the technicals, I don't know that Satoshi really thought through the technicals of mining, right? Because Satoshi really thought that mining would end up, continuing to be something we could all do in our garages with CPUs, and that hold. But nonetheless, because the algorithm is set in stone now, and there's virtually zero chance that it will ever be changed because it's so decentralized. It's going to be timed to the U.S. presidential election. The impact of that on all the Washington D.C. craziness is that the policy people are in control right now, and it's crystal clear the policy people are, they definitely tried to push crypto to zero. They thought they thought they would succeed, is what I'm hearing. And by the way, thank you to the Washington D.C. people who, every time I talk, seemingly almost every time, people reach out to me and give me more pieces of the puzzle. Okay, so I have a very good sense of what actually happened in Washington D.C. and just the craziness of it all. But the policy people are not going to be in charge during an election year. The campaign people are going to be more in charge of policy during an election year. And let's face it, when 19% of New York adults own crypto, they're not going to want to, given the demographic of who owns crypto, they're not necessarily going to want to keep this anti-crypto push going during a presidential election year.
Well,
so
I'd like to see what the percentage is in Massachusetts, where Elizabeth Warren is, and see what her base. And I realize her base voter's probably older and not a young crypto holder, but it's got to be a similar percentage. You know, the percentages, the law of large numbers means everyone's going to kind of move to the mean here pretty shortly.
Here's the thing, like we talked about already, she is in crypto. She's absolutely in crypto. There's no way she's not. How she's playing her political opponents to vilify crypto, but yet she's doing things on the back end, especially when it comes to the Fed and how they're sitting there establishing master Fed notes and setting things out. There's just no way. It's not possible. I don't think Ms. Warren isn't.
I haven't heard that. Everything I've heard is how much she hates it, and her she's got.
It's all corruption. It's North Korea.
Well, yeah. Look, I mean, it's the more stuff that comes out, and it will eventually come out about who's really in control of domestic financial services policy. It's not who folks thought they were voting for.
Right. Now let's talk a little bit about that. When you went into apply for your master account, you understood that at the time when you were setting up for it, it was a different administration, and then the current administration took over and put the squeeze on you. Did you at the time understand that I mean, clearly now you understand, wow, this is a really all-encompassing, choke point on you. Mm-hmm. But what was it that made you see the turn? Could you see that happen before the Fed denied you a master account, or was that a total shock to you? And then like, whoa, wait, what?
No, as I've said before, we were blindsided by it. And it's clear that in retrospect, we were just the tip of the spear of this olive government U.S. crackdown on crypto. And we knew it. I've shared this before as well. We knew it because there were leaks that Custodia was going to be voted down 2 days before the vote happened. And we hadn't even decided whether to withdraw our application or not at that point. And so clearly there was pressure being applied to us to withdraw our application, but we weren't engaging with the reporters who were hounding us, literally hounding us, trying to get a comment. And then when we finally, what was interesting is, what caused us to finally engage is one of the reporters put it in email that they understood that all of the applicants that had pending applications at the federal banking agencies were simultaneously asked to withdraw their applications. So we had the smoking gun that there was Operation Chokepoint 2.0 because they were getting that direct from the administration and they were hounding us for a comment. And we ended up having several conversations with the reporters over that next day or so. And it was just crystal clear that they were being leaked by the people in charge. We did, I'm not going to say more because there will be a lot more that comes out, but this whole from the White House. I've said that many times before. Why the Fed went along, I'm starting to get a pretty good picture. But again, these federal agencies like the Fed are supposedly independent, right? I'll leave that as a rhetorical question.
Well, one of the things that I saw, and I remember this day very clearly, is in one day I heard one of the House, I think it was one of the Congress's committees. I heard the President of the United States, I heard the Fed or FDIC, which one of them, all mention you in one day. And to think about to get something to come out of the president's mouth has to go through so many levels and so much. It's not a spur. I mean, we know the president has plenty of spur of the moment things, but he has to know them and understand them. He doesn't know about crypto and all that type of stuff. We all know that. But in one day, all these arms of the government and independent sources it just basically, rained on your parade. And I saw that. I said, that's never happened ever in any industry with anything.
Talking about Custodia Bank, the Senate floor. I've never met
him too. He's my senator in Illinois, and I'm like, what's going on? I said something's amiss here, and we found that out. And so I wanted in another interview. You mentioned the White House having some issues with crypto. We all know the president is not behind it because he's long past the age of caring or needing to put in the time to really understand this type of stuff. He's got plenty of issues he needs to figure out, including how to get to his car and back. Who is there a base level lobbying group that's against you? Is it a base level elected group of officials that's against you? Who is that base that's influencing the president in policy?
Oh, I mean, it's an open secret in Washington, D.C. Again, it's really in charge of all this. And some of it is as simple as personnel is policy, right? And so if the personnel decision is being made by an acolyte of someone, then the people in political appointment jobs are all aligned. And they have a very hardline stance. And again, what's so fascinating is as I'm learning all this, and again, people are, I will say, just like in the Trump White House, there were pro-crypto people and anti-crypto people. The same thing is true in the Biden administration and the Biden White House. It is not a unanimous, decision to link up with Elizabeth Warren. Okay. However, if you look at the people who are making the decisions, and again, I've never met any of these people. That's what's so funny. I've never met any. They were all, targeting us. I don't know. People started asking me in the beginning, is this a red state, blue state thing? Well, there's a Wall Street Journal article today about Wyoming and its digital asset initiative. And who do they quote? A Democrat in a red state, right? Because he's the guy who's running with it right now. So it is so not political. That's the funny thing. But somebody asked me that, and in the beginning, that's just nuts. But who knows? All I'll say is there are strange bedfellows. This issue does not fall across party lines. It actually tends to cut across horizontals that are really interesting. The folks who are like the old school free speech ACLU types really like it in the Democratic Party, along with the more liberty oriented Republicans, and there's an alignment on the Democratic side from sort of, the defenders of the status quo, including the big banking system and the status quo financial system, including and especially the big incumbent banks, aligning with the neocons who, I like to joke, think we're all terrorists until we prove otherwise in the Republican Party, right? There are neocons in both parties. But you see my point, like it's not an alignment, a traditional alignment of Democrats and Republicans. And it hasn't been, inside the White House, both the Trump White House and the Biden White House, there have been supporters.
Well, we've all seen one of the problems.
Go ahead.
So we've seen the problems is even now, even on LinkedIn, even everywhere where you see seemingly educated people, there's still people saying there's no use for crypto. It's not at all. There's nothing there at all. It's just everything's a big Ponzi scheme. And then you go back with them and say, look, here's 300 projects that are, have a actual utility. There's a lending groups. There's now groups doing payroll. There's all, just name it. It's slowly starting to fill every niche in regular business as a digital asset company is starting to fill. And they don't understand that. They just stay on that trope of, this is a scam, it's a Ponzi scheme, and everything's bad. And I find when you talk to a lot of these people directly, they're like, oh, well, yeah, my nephew has a little crypto and stuff and blah, blah, blah. And he got rug pulled once and stuff like that. And I said, people get rug pulled in every industry. There's not an industry you can think of when it was brand new that there was not scams. Even the banking industry in the 20s, in the 1910s. That Madoff, right? But every industry has its charlatans in the beginning of it, and with industry knowledge and industry regulation, things kind of smooth out. And there's still a lot of people who don't understand it. So when they pick a side, they dig in. As you've seen in Washington, D.C., people dig in their side. And no matter how much you tell them, they hear nothing. They just hear nothing. And it's frustrating. It's frustrating because we have this great new product and there's people fighting against it and the businesses are going overseas.
Well, yeah, that's true. But, a perfect example is the announcement this week by Visa Coin. I mean, I tweeted out yesterday, that's Visa debanking the banks. Visa is a network that was
Right.
created by the banks. Then they spun off the company, so it's now an independent, publicly traded company. But what it is a network. It's a fintech company, really. It's a network
Right.
that connects the lenders to the borrowers, i.e., users, the cardholders. And the point is that Visa this is just a pilot, right? And boy, there were a lot of people who were screaming that it was Solana. I do really wonder. I mean, frankly, the traditional financial institutions are of course going to lean more towards central controlled networks. So there were a lot of people really challenging why they bothered to go there as opposed to, the more decentralized networks. But net, it's still significant. That's Visa starting to settle U.S. dollar transactions outside of the U.S. in U.S. dollars, not in the
in USDC.
I mean,
is that what it was?
Big deal.
Yes.
It's USDC,
Right.
Exactly. Right.
Yeah.
This is a big deal.
All right.
Right?
Before we get on to the gatekeeper discussion, let's go. I have a quick question from someone about BlackRock and the ETFs things. I've listened to your interviews and some of your Twitter spaces in which you talk about it. The ETF, they didn't shoot it down; they just punted on everything right now.
Right. That's what they've been doing for years. Yeah.
Right. They just delay, and let it. Maybe it'll come out on the other side of the presidential election, and they won't have to deal with it. But what are your thoughts on the ETFs? I've heard you say. Well, let me back up. The market is always like, woo, it's going to be this huge boon. And I've heard you come out and say, well, BlackRock could create as many units as they want, and they can short it too. So it could be a negative pressure on the market. Am I summarizing that correctly? What are your thoughts on the ETFs?
Yeah, I've always said it's a double-edged sword. I've been saying that since 2018. It would be a double-edged sword for big Wall Street money to come into Bitcoin precisely because of the games that they play. You start commingling it as collateral. You start to lose track of how many units they have in inventory relative to what they've promised out to buyers, right? And we always want it to be one-to-one. ETF market makers do have the ability to create more units than they have collateral in their inventory. That is, right. Go read the fine print of any ETF prospectus and you're going to see that. Now, they're not going far out. It's not going to be 200%, right? It's probably 5 or 10%. But the market maker's job is to keep making markets. But yes, they have the ability more IOUs for Bitcoin than the actual Bitcoin they have in inventory. But back to your question about will it be approved? I'm skeptical because, again, I can't prove all the things that people are telling me. I don't know if they're true, but I'm hearing a very consistent story. The Biden White House it just really set out to kill this industry. And Gary Gensler's still in his job. He's part of this. Gary Gensler's still in this job at the SEC. And I have not been uniformly critical of him. I've been willing to call balls and strikes when the SEC has done good things. And I do think that the crackdown on the criminals is justified. And I wish they'd done it sooner and even more, with even more force than they did, because I think they would have prevented some of the consumer horror stories that we all are just horrified by. Right. But
three letters.
Change. What are the 3 letters?
SBF.
Oh, yeah.
Right.
No, but not just him.
Right.
Not just him.
Right. But there's a lot more.
Right.
There were
I agree with you.
Right.
Yeah, absolutely.
All right. Let's pivot for the last. I understand you have a hard stop in a few minutes here. But I couldn't go any longer without really getting into the Gatekeepers discussion. And the person that rings my ear about that all the time is Mr. Jason Myers here of Auditchain. Jason, I think you and Caitlin have met in the past at some point.
Oh, we go way back. Hey, Caitlin.
Hey there.
How are you?
Good. Nice to see you.
You too.
How are you?
Yeah, fantastic. Yep.
Well, one of the things that Caitlin's been struggling with here is being kept out. And Jason, you've talked long and hard into my ear about the gatekeepers and the emperor and the gladiators and stuff. And so let's finish up this discussion here with a little panel discussion about the groups that keep us out.
So Caitlin knows the legal terminology of what a gatekeeper is. However, not many people in crypto understand what a gatekeeper is, right? They are banks, broker-dealers, custodians, transfer agents, PCAOB registered accounting firms, law firms, and DTC. If you want to touch securities as an intermediary, you must register as a gatekeeper with the SEC. It is a walled garden. It takes a long time in order to get approved as a gatekeeper. And the gatekeepers see blockchain as representing a $200+ billion a year cost savings in a lift and shift. Forget about just the digital assets themselves. It's how they're cleared, how they're settled. And as Caitlin was saying about Visa, how they're moving in that direction. You don't hear about all these plans and designs by these banks, but they've got the most patents in blockchain. B of A, I believe, has the largest patent portfolio.
Yes, they do.
And this is a fight to the death. And they're using the public, but in my opinion, I want to say this properly, they're using the public budget of the SEC and the SEC itself in order to contain competition. That's how I feel about it.
Preach.
And I think Caitlin's suffering from that.
Yeah, although to be clear, we're not an applicant with the SEC, so
True.
Different agency, but clearly all coordinated, right? Look at when Custodia got denied on January 27th, the press release about the Custodia denial went out at precisely the same time as a White House statement against crypto. It was all coordinated with military precision and another statement from the Fed against crypto, all at the same time, right? So all part of this all of government crackdown.
Yeah, not good at all. Not good at all. But by the way, have you ever met Hester Pierce, Commissioner Hester Pierce?
I have, yes.
Now, I think.
Can I
just
interrupt real
think
quick?
that perhaps there needs to be two of you on, or you need to get together at some point. Maybe both be SEC commissioners or both be in
Tom?
business together, because the viewpoints.
You're breaking up.
Yeah,
Breaking up.
sorry, apparently my mic is having trouble there.
Yeah, but we gotcha. We gotcha.
Yeah, go ahead.
Audio
Go ahead,
check.
Caitlin.
Audio check.
There you go. Got it. Perfect.
Yep, there you're back.
Sorry about that. My question is that someday the administration will change, and hopefully sooner rather than later, and hopefully Ms. Pierce will be in a position to work on these ATFs in a position that Mr. Gensler doesn't want to take right now.
Well, can I?
Yeah, I much chance of anything happening on the ETFs before the end of the Biden administration. We just don't know when that is going to be. Is it next November, or is it another 4 years beyond that?
Well, it depends on. I guess it depends on the administration and how the Senate goes.
I was actually going to ask you, Caitlin, is there case law on the ability to push back against the Federal Reserve for their denial of the master account?
And talk about the 138 lawsuits in relationship to that.
I don't know about the 138. There are 3 pending lawsuits on the statutory question, whether the Federal Reserve has discretion, or whether the statute, which says the Federal Reserve shall provide services to all eligible depository institutions, that is a question that is at issue in now 3 pending lawsuits in 3 different court circuits in the United States, of which Custodia was the first. There have been 2 filed this summer that are in flight, and those 2 are not for banks that have anything to do with crypto. So that the Fed issue is much, much, much broader than crypto. Some would say the SEC issue is as well, because by basically betting the farm, the whole Howey test might be reopened, right? The U.S. has been quite different than most of the world in having investment contracts be included in the definition of security. So the SEC ends up sweeping in a lot of things that the securities regulator in other countries doesn't sweep in to its jurisdiction. And frankly, that could end up being reopened. So this is what's so interesting, is that the collective crypto freak out of the of Washington, D.C. under the Biden administration has actually kicked these issues into courts. And what is happening is that multiple of these lawsuits are potentially going to have implications well beyond just crypto. It just happened to be that crypto was the impetus for some of these lawsuits. And what's happening with the Federal Reserve having been sued by 2 non-crypto banks over the same statutory question just in the last, and I understand more are coming, and by the way, those crypto as well, that just goes to show you that the strategy of trying to crypto with such regulatory reach, which has so far been slapped back by the court system,
right.
It's boomeranging.
Well, what I don't understand is how the Fed their mandate can say shall, and shall means for them maybe. And in other arms of the U.S. government and other laws, specifically like firearms law and court appointments and things like that, like Marbury versus Madison stuff, shall means shall. You must deliver. You must do what you need to do. It's almost like you need to do a writ of mandamus here to get the government to force it to do what it's supposed to do under law. I don't understand the dichotomy of that. Why that can say shall, they should do it, and other parts of the government say shall, and they do it. But the Fed's like, meh. It makes no sense,
well, look,
and it must drive you insane, too.
The founders of this country, in their great wisdom, created 3 equal branches of government. And so when one branch of government doesn't adhere to the statutes that apply to it, there are 2 other branches of government that can force that, one of which is Congress. Congress is paralyzed right now because it's in divided hands. And the other of which is the judicial branch. And this is where you're seeing the activity. And again, I said, I don't policy-wise is going to change until the end of the Biden administration. Possibly the political people, the campaign people get involved and start telling the Biden White House back off, because there are crypto voters who are going to vote in the presidential election. And, that key demographic of millennials and Zoomers definitely tends to be heavier users of crypto. And the octogenarians tend to be less so, although not exclusively, but certainly less so. So see how this all plays out. But where I'm going is the court decisions are going to be happening before the presidential election. And so,
right.
We'll see. I'm skeptical that anything's going to change in Washington. It's these court decisions, which so far have been on the side of the companies that have been aggrieved by the agency overreach in multiple instances.
Well, Caitlin, we've covered a lot of topics today. We're reaching the top of the hour here, and I understand you have to go on it. Give us one last time. I got the Custodia Bank website back up here.
Awesome.
Tell the customers, who do you want to come visit you and open up an account?
We're looking at any businesses, any lawful businesses in the United States. We can serve in any industry. Just make sure that we're operating in the state that you are in. Our website is updated every day as we get the authorization to do business in more states. We're in about half the U.S. states right now. And just get in touch with us. Let's see if there's something to do. Again, U.S. dollar services and money market is available now. Bitcoin custody coming hopefully very soon.
Caitlin, you got to come to Switzerland because the banking in Switzerland is really difficult for crypto companies.
Oh, that's interesting. Because the Swiss, there are banks operating in Switzerland. The Swiss financial regulator was way ahead of other developed country financial services regulators. In fact, the Wyoming custody rules and the law was actually copied from Switzerland. So Switzerland was the one who did the early heavy lifting back in 2016, 2017 on this. So their banks have been able to be involved. I don't know if that's changed very much in the last couple of years, but they're early, and their banks, unlike U.S. banks, are not just allowed to custody crypto. In Switzerland, they're allowed to own it on their balance sheet. And that is not part of Custodia's model.
It's not as easy to open a bank account as what people see in the public and on social media. Yeah. But if you're an established institution, it's a lot easier to get a license to serve crypto people from FINMA.
Well, again, this is the inherent advantage that incumbents have within the system, right? And there is an incumbency bias across the board. It is hard for startups to break into the traditional financial services industry, and that's the way that they designed the system.
Well, the compliance costs are so much anyway. It's hard for startups.
Yeah, well, but there's a bias against startups as well. So yeah.
Yep. Anyway, I'm in Canada right now. I'm just happy to be sitting in the nation's capital here. I moved over from Chicago earlier in the week because I spend part of my time here. Any international partnerships that could bring you up into Canada, or is that a long way away going international?
Yeah, our business plan at the inception does include serving non-U.S. companies, but for right now, we're walking before we run. And again,
still a big market in the U.S. to serve.
You bet. Yeah. Especially with the departure of several of our customers, our total addressable market is definitely lower, but our potential for market share is definitely a lot higher than it was before Silvergate and Signature exited the market. So, hey guys, I gotta go. We're just off the top of the hour here, but thank you so much. I really appreciate you having us on.
You're welcome. Thank you for coming on today. Thank you for being on our show. I really appreciate it. And I'll take this time to wrap up the show. Ladies and gentlemen, my name is Tom, otherwise known as Striking. Everybody, thank you for joining in with the show today. And we are off, and we will see you again on the show. Once again, thank you to Caitlin Long.